Hey everyone, welcome back to Fiscal Voyage. This is Felix, and today's video we're going to talk about a new stock that I opened a position in. This came with the opportunity with a lot of the market, with the the government administration switch and things like that, and this sector has been pulling back substantially. The sector of like food industry, because of RFK and his policies and trying to get rid of a lot of like quote unquote poisons and chemicals in the food. So that came with opportunities with some of these stocks. And one of these stocks that I purchased, if we go to my interactive broker account, is PEP, which is Pepsi. I bought 16 shares, about $2,400, $2,500 worth of shares, and this is a started position. I think the company is fairly valued, slightly undervalued right now, and I'm waiting for a more substantial pullback if that happens. But if not, I'm happy with the current position I bought right now, with where the price at, and I'll show you why exactly, technically and fundamentally. So first off, let's go to fast graph, and you can see here Pepsi. If we max out this chart here and remove the price, you can see Pepsi has been growing earnings 6.8% annually over the past 20 years. So it's outstanding. Obviously, there's been years where it's had a negative or a down year. For example, 2012, 2015, 2019, and 2020 was a flat year. But then it's picking up very nicely. And analysts are expecting mid single digit, 6-7% for the next few years. And you can see here the market tend to value this company around a 21 PE on the long term. So that's an indicator there as well. Normally PE around 15 tends to be fair, but since Pepsi is such a high quality dividend growth stocks, the market, you have to pay a premium for this stock. And you can see here S&P credit rating of A+, 60% long-term debt to cap. And then we put the price on the chart here. You can see here right now it has a PE around 19.62. So it's actually lower than the 20-year normal multiple. And obviously here after the 08-09, you had a great opportunity to get this around a 15 PE to 16 PE. That was a great opportunity to buy shares. And I actually bought shares a while back before COVID. I think it was around this time. I had around 120 or 108 around there, between that area. I bought shares and I wanted more, but it never pulled back further. And I actually sold shares of my Pepsi around this time period in 2023, and I've just been waiting to get an opportunity to buy shares. And I just recently bought more shares, as you saw here on the 19th, which was yesterday, on Tuesday. And you can see here we're showing this time period. Over the past 10 years, or more like 8 or 7 years, Pepsi had commanded a high premium of 24. I don't expect it to continue to have the high premium, but definitely in the 20s. And I'm buying a high quality company at a decent fair value price. Now it can go to 120, and I'll show you why, technically why I think it could get there. But I'm happy with where I bought shares. Now if we go to forecasting here, long-term growth, you can see here they're expecting around 6%. And now if the company continues to stay around the 20 multiple, you can have a nice 9%, and it gets up to 21 multiple, 10%. So it's not crazy rate of return for the next few years, but I'm okay with that because they have a nice dividend of 3.4, and the earnings yield currently is at 5. I got a little better because I had a nice update today. Probably got around like 5.5 or so, but it's such a high quality company, and I wanted to purchase some shares, and just starter shares. And I'll show you where I'm looking at technically, where I would like to buy a lot more and go really all in Pepsi if it gets to this price point. But first off, we go to operating cash flow. You can see here operating cash flow covers the dividend. Free cash flow, you can see here, for this year is expected to barely cover the dividend, but picking up the following years. And you can see here sales been increasing. This year is expected only a 1% increase in sales, but next few years 3 to 4% increase in sales. Earnings before interest, tax, and depreciation and amortizations continue to grow, so I'm liking that a lot as well. So you can see here overall it looks good. Forecasting analyst scorecard looks good. It's pretty accurate scorecard, analyst scoring. So that's good. And normal multiple, I like to put this at the lower part if we could find that around here 20.7. You can see here that's where it is right now. And if it stays there, we get around 12 to 13% annual rate of return, which is good. There's a high quality company, and I will buy more if it continues to go down around the 150 to 145 area, and I'll show you why shortly technically. So now we go to CFRA. CFRA gives it a buy rating with the price here at 158, 12-year month price target at 190, 3-year projected earning growth is good at 9%. You can see here earnings are expected also to be grown from CFRA, so I like that a lot. I don't think they have a fair price here. No, they don't. They just have the price 12-month price target of 190. But you can see here I like that. And if we go to Morningstar, also Morningstar gives it a 4-star rating, which is a buy, wide moat, which is good. It hasn't updated its price, but it has a fair price of 174. So you can see here it's also undervalued based on Morningstar, CFRA, and FastGraph. So all good indicators that the company is undervalued. And next, so we're going to look at the technical size. So you can see here, so I show you here monthly chart. I drew these support area. So why I bought shares around that 156, if we go back to here at 156.13, so let's say 156. You can see here there was strong support. That's why I bought shares. If we go here, kind of like this area right here from 153 all the way to 158. So I got it right over here, 156, kind of like at near the bottom there on yesterday. And it actually had a nice rally up today. But that's why I bought shares. I had an alert here around 156 and the alert trigger, so I bought shares. And that's how that works. And my next support area is over here at 145, 140. If it gets to that 145 area, I'm going to be buying more shares. Another, maybe $3,000, $4,000 worth of shares here. And then this is where I go all in around 128, 130. And I'll show you why on the 3-month chart. Because on the 3-month chart, you can see here that 130 area coincides with this moving average, which you can see here it bounced here very nicely in the 0809 crash. So if you bought here around the $50 area, you made a killing. So I'm kind of expecting that as well. If this Pepsi goes down to there, the whole market is coming down as well, because Pepsi, is an S&P 500, is a big stock. Coca-Cola, kind of similar. So things like that. So if it gets down here, a lot of stocks will be on sale as well. But at 130 is where I'm going to be uploading more shares, a lot more shares here because of this area, this moving average, the 50 moving average on the 3-month chart. So there's going to be a strong support resistance. We have strong support here, and we have strong support on the moving average. And that, if we go to the monthly chart, you can see here, this is where I draw this this bar here, the support level. You can see here we had a big what is it called, the bottom tail here, and it was going down here, and then we have this huge buyer stepping up here on March 2021. So that's why I'm at that 130 area, I will be buying shares. So that's kind of what I'm looking at here. It goes and coincides with that 3-month moving average, as well as this support area. So all that is a good indicator that strong support here should drive the stock much higher. And if we go back to here, that also goes in line here over here with a 15 PE of 129 in 2025 earnings of 865. You can see here that would be a great buying opportunity. You probably have a 4.5% yield or so, maybe 6 or 7% earnings yield. So that's great. It's gonna be great buying opportunity at $130. So right now I'm gonna be holding what I have, and my next position to be buying is that 145. I'll nibble another 2-3 grand, and then if it continues to go lower, this is where I'm going to go all in at 130. Again, this is a high quality company. This is one of those stocks that's going to be here for a long time. The soft drinks, they also make a lot of snacks and things like that. So those are all good. It's a defensive type stock. You know, even on bad economies, people still buy their soft drinks, their snacks, and things like that. So this is why I like Pepsi. And eventually, I will hopefully want to buy Coca-Cola too. I used to own shares of that, but I sold it at the recent the upturn. So I want to, you know, buy more shares of Coca-Cola, open position Coca-Cola if it pulls back further. If we take a look at Coca-Cola here, we can see here it's been pulling back, but I wanted more. I need like a 18 PE, a 19 PE or so before I want to open position Coca-Cola. But overall, you can see here, you know, the reason why I bought Pepsi. I actually covered this stock ES on my last video. Make sure to check that out. And again, if you're new to the channel, make sure to hit that subscribe button and hit that like button for the YouTube algorithm. And I'll see you guys in the next one.